Trading has closed on September 1st, 2023. As always, we'll do our disclaimer, go over our calls, and make some predictions. This is my plan, but it's a plan. I can change it. I can be completely wrong. And for the next couple of weeks, I'm just pretty busy with other things, and I'm not going to have the amount of time I normally have. If you care to risk money, bear that in mind. All right, today's pattern was the one with the early low, what we called for on Tuesday when the market reopened. It should be the pattern with the early high. We had this wall into the close. We said oftentimes that is a sign of panic selling and is followed by gapping up over this high, or at least gapping and clearing the high promptly. Doesn't happen every time, but it certainly did happen. We said this was a breakdown through this line, and that if it were confirmed, we should see lower prices even if we didn't close lower. So that's a confirmed break. This is a reminder of what we said. These are the patterns I think we'll see next week. Well, when you break this line, as long as you stay under it, you should go back to the origin of the line, which is around 44.20. But that doesn't mean you go there in a straight line, and doesn't mean you go there Tuesday. We do get to cross an old MEJT target off the list from August 4th, 45.3504. Resistance just over and just at the target. Next resistance I have is the old FOMC announcement price from July, 45.5565. That's also where this line is, so we could go all the way up there without changing anything. It doesn't mean that we will. I mean, we could just drop out of the floor could drop out from under us on Tuesday, but if we go up here, it doesn't change anything. MEJT gave an ultimate sell signal in the afternoon, said this drop was false, wouldn't stick, said this rally was false, wouldn't stick, said this drop was false and wouldn't stick, and that's already played out. Well, at some point, we want this rally to end and give us our wave C down. It's being pretty stubborn. It's had a lot of perfectly good setups for tops here, which never triggered because they didn't follow through. I think the main problem is the sentiment indicators are so wildly negative, meaning the public is negative, and it's hard to drop when you have that many bears around. They've already sold. Well, this was the old target. This was the old count I had, and it was pretty until we hit this higher high today. I mean, that was your A, that was your B. Let's try this again. There was your A, there was your B, there was your C. It's perfect. And of course, just going over this doesn't really change anything if it's an expanded flat, but it's not what I would expect. I would expect wave blue C to resemble wave blue A, even though it doesn't have to. I'd expect this to fall out of bed if that's what's going on. And if it is a big move like that, I like the count to be prettier than it is. Doesn't mean this is wrong, just means I'm looking for other things. The next level I have is this 45, 55, 65 level. Well, there is wave balance at that level. You can set wave A here, wave B here, and you get a direct hit at that price. And if you look inside wave red B. You have an ABC. The ABC have good fibs. C is 1.618 times A. And wave red C wave red C and wave red A have a good fib relationship too. So it's at least possible if we go up, we're going to find resistance around 45, 55, 65. Doesn't mean we will go up. But Tuesday's action is normally a bullish day. And if we went up here, I don't think it would change anything. Right now we have gapped up, new high, closed under all these highs. That's negative. But after dropping all day, we also closed over all the lows, and that's positive. So that's usually resolved early on Tuesday. And if we go up, that's a reasonable target. I'm certain other numbers work too. But if we go up, it's a reasonable target. And if we start down, I still like the origin of this leg, which is 44.20. It's not, I don't usually hold stuff over the weekend, and certainly when I can explain a move in either direction, it's not a time for me to do it. Well, Tuesday's pattern has the early high. We could still gap down. Typically, it's a rally day with a high in the final hour, but to fail, it's a straight line drop. We gapped up to a new high, but closed under numerous intraday highs. And if that's maintained in Tuesday's early trade, it should lead to lower prices regardless of how we close. And ideally, if we trade lower, we should retrace to around 44.20 cash. There are a number of things that suggest we're not going there immediately. The day-long drop couldn't manage to close under intraday lows. It's particularly significant on the Friday, which is not noted for being a good time for a trend reversal. The public isn't going to buy stocks when the weekends, a long weekend's coming up, and you're dropping through all kinds of important levels. They're not the ones who are going to buy. NASDAQ, McClellan Oscillator, and Volatility Index, which had reversed through their respective Bollinger Bands, now are back outside them, and that invalidates the signal. And we had a beautiful wave count, and it's no longer beautiful. There is balance of the waves at 45, 55, 65, which is an old FOMC announcement price, and if we rally, that's one logical place for the move to stop. That price doesn't take us over the dotted trend line, and if we're going to go to 44.20, I expect that trend line to hold. If instead we drop right from the open, we could still hit the target. Sentiment indicators right now make me leery of playing anything from the short side until public pessimism goes away. So we have the pattern with the early high. Usually it's a rally day. Failure is a straight line drop. We have a reasonable target, 45, 55. If we rally, we have a reasonable target, 44.20. If we drop, and I don't see any reason to risk any money until you see what direction we're going to go, which I think will be pretty clear early on. And that's today's call.